Construction and engineering company Basil Read reported results today for the half year to the end of June. Revenue of 2.9 billion rand, a modest increase of 12%. Diluted headline earnings per share came in at 75.21 cents compared to 104.34 cents last year. Operating profit decreased 26% to 150 million rand, which translated into an operating margin of around 5.1%. The share price closed today at around 11 rand and 52 cents. Joining us now is the CEO of Basil Read, Marius Heyns. Thank you so much, sir, for joining us. Great to have you on the program. Let's touch on that revenue. We saw revenue increasing by 12% and then operating profit decreasing by 26%. Quite a massive difference between the two numbers that we're looking at here. Could you tell us what really contributed to that massive drop in operating profit?
Basically on the construction sector, after the World Cup, a lot of competition has crept into the market, which we've created for ourselves.
Yes.
To appease government as well, to bring smaller contractors into the fold. And we've created a lot of competition for ourselves, which we have to reduce the margins now.
Yeah, so your margin, in fact, for construction is sitting at around 2.4%, the lowest of the stable.
That's correct, yeah.
It's interesting because you're starting to explore other markets when it comes to construction. I mean, we're looking at Botswana, Namibia, Zimbabwe as well. You've established offices in Zambia. Tell us about construction prospects on the rest of the continent and the margin differences.
What we're doing is definitely margins are better across the border because of the risk. Unfortunately, now we have the same scenario where all the larger companies are moving into the same arena as where we're moving. But we've deliberately following our clients and specifically mining clients, and we do not target necessarily governments in Africa.
And are we seeing quite a bit of capex spend when it comes to mining?
Yes, definitely. Yeah, very.
I also know that you've also started to realign yourself and looking at the alternative energy space, because you've actually sold off Newport Construction and subsequently acquired Siyaya Energy and the likes of Metro Wind as well. Is this just really focused on the South African alternative energy space, or are you looking to expand this further onto the continent?
No, we would like to expand further, but obviously being at home makes it easier for us. And those investments were more strategic, and we invested in 2 wind farms. And then also Siyaya is more a petroleum business, which brings us closer to diversify into oil and gas, as well as the greater energy side.
We also know that you've received quite a bit of criticism with regards to the TWP acquisition. I think you already knew what I was going to tell you about. And of course, because we know that the acquisition was made during the top of the cycle, so to speak. But a massive turnaround coming through in TWP, and we know that you've got key work that you're doing for Assmang, Mimosa, Anglo Gold as well, and Lonmin. I can see that it's mostly shifted towards the resource mining space. Again, this is where we're seeing growth coming through.
Definitely. The 2 years ago when we acquired TWP, we were criticized severely for acquiring the company. And I'm very happy to say that it's paid off, and especially from a strategic point of view.
Let's touch on TWP prospects going forward. Are these kind of numbers sustainable? We're looking at an operating margin for TWP within the engineering space, 9.6%. So that's a fair number, and you're looking at an order book of around 1.5 billion rand. The
order book is actually bigger, but we only take an 18-month view. And this year, TWP will turn over around about 1 billion rand. And so those margins are achievable going forward, and it's actually improving because your billability has improved quite a lot.
Let's touch on Botswana, because this is also a very exciting space, and we're looking at margins there of around 12%. You also haven't included the whole amount in, because we know it's worth around 5 billion rand or so, and within your order book, I see on your results you've only allocated around 2.3 billion rand. Tell us about prospects there, and do you think it's going to be an ongoing project over and above the lifespan of the project?
Fantastic opportunities in the contract mining side. Unfortunately, the capital expenditure is hampering us severely, and this year alone, for the first 6 months, we've already spent 300 million on capex, and the bulk of that has gone to the mining sector. So we have to balance it all the time, and there's some of the work that we cannot tender for, or we try and stay away from because of the capacity in terms of acquiring the plant.
Let's touch on government's talk about this 846 billion rand that they've been talking about for quite some time. We know the Eastern Aqueduct, of course, has also been top of the agenda. Have we actually started to see this money filtering through into the construction space? Because the rhetoric is on the ground that we're not really seeing government spending, but I suppose you could give us a little bit more insight into that.
You know, we priced about 35 billion rands worth of work in the last 6 months, and that's up to the end of June. But July and August, we've seen a dramatic downturn on those tenders coming out. So we're a bit disappointed that the work that we're expecting has not materialized. And we would like to see a little bit more communication from government on what is coming and when it will come and the type of projects. We do hear the rumors and we can see there's action, but still very much disorganized.
Well, it's quite interesting because we've heard it during the budget speeches and also when Jacob Zuma addresses the nation as well. Tell us about the prospects going forward with regards to work from the public sector. We know that there have also been issues with the likes of payment delays and so forth. You were talking about being slightly averse to working with government in Africa. Could that be a scenario here?
I don't think it'll ever happen. I think our government in South Africa is strong. The balance sheet of the government is strong. I think it's just a lack of expertise and to roll out and to prioritize what they want to do first. But we believe it will come. We just have to be patient, and our order book is good enough that we can wait for it.
Can we expect a construction space like we saw in 2007, between 2005 and 2007?
No, I don't believe we'll ever get back to there, but I think there will be more an even flow of work coming out.